I can't see values going down anytime soon. If anything, they'll just continue to go up, just maybe at a slower pace.
All right, and just like that, guys, we are back with another episode of Mind the Growth Podcast. As always, I am Chris Kinghorn.
And I'm Eric Hoffman.
So let's jump right into it, Eric. I am currently in the middle of buying a house. I actually just signed closing docs today.
Congratulations.
Thank you. I think we're hoping to see some continued appreciation here in the Phoenix market. So we're able to beat some of the institutional investors out of a place, and we're excited about it.
Nice. So you went toe to toe with BlackRock, is what you're saying.
I did. I successfully defeated BlackRock. So
add that to the resume.
Exactly. Joke's on you guys. But I think since this is kind of what's going in my life right now, maybe we spend a little time talking about real estate, some background. I know that you've done a few deals. You're interested in the space, so maybe we take some time and talk shop.
Yeah, I'm an amateur, so give me a masterclass, please.
I'm going to try not to do too much talking, so just tell me to shut up if I'm going too far. But I got involved in the real estate space when I was 19, I want to say. I think that's when I got my Arizona real estate license, and eventually got into post-college, moved to California and got a license in California as well too. But I think the market right now is very interesting. And I think that what we're hearing a lot of, especially social media, you've got all these influencers and people talking about investing into real estate. And there's just so many different ways and avenues to do so, whether it's you're buying a single family home and living in it for a few years and end up buying another property. But I want to kind of maybe touch on some of those. You want to run through yours first? Because I feel like you did a really good job with your first purchase.
I mean, I got lucky twice, so hopefully a third time is going to be the charm in the future. But when the real estate market tanked in 2008, my older brother and I had a condo together. And that condo, it just was pretty stagnant in terms of value. So when I was done with college, because he was in medical school at the time, I was in college at ASU at the time. So we were living relatively close to both campuses. Once we were both done with school, we figured we should probably move where everyone else is in Old Town Scottsdale. That's where the young kids are these days. So I personally purchased a house at that time. It was 2012. So it was just, I guess, at that point starting to rebound in Arizona, because Phoenix got hit pretty hard overall in the housing crash in 2008. So at the time, it's weird because it was a similar feel at that time when I was buying to when I was buying in 2018, as well as now. There's just not a lot of supply and a lot of institutional and investing buyers trying to scoop everything up with cash. And so I looked for probably 3+ months at different homes in Scottsdale area and in other surrounding areas, but I was mainly focused on Old Town. And there's just nothing out there. And the good ones that there was 10, 15 offers that were going over asking price. So I got a little nervous, as one does when buying their first property. And I didn't want to overextend for my budget, but I also wanted to get something that I wanted to live in for a while. And so when I was at that point of, okay, there's just nothing out there, I just need to settle or buy a dump and try to fix it up, I was going to a showing in, this neighborhood in Old Town, and across the street from the showing that I was going to see was this house that was just being renovated, and it was near the point of completion. So I just took it upon myself to kind of walk in with all of the construction workers and kind of take a look. I asked them, hey, could I take a look around? And they're like, yeah, of course. And so I walked in, and it was nearly perfect for what I was looking for. It was a 4-bed, 3-bath, 2,400 square feet. And it had like a little mini pool in the backyard, a nice sized backyard. And it was in a great neighborhood. So I found out who the real estate agent was. We contacted them. She told us that it wasn't going to go onto the market for another week, and they were already accepting offers pre-listing. And so we're like, okay, how do we throw our hats in the mix? And so we did. There were 7 other offers at the time, and so I put in an offer at the time. I think it was listed for three. I want to say 340. That's what I recall. So 340,000 at the time, and I wound up putting an offer in at 340 at asking price. They said, there was 2 other offers that were above, so I went to 350, and then my final offer was at 360, and it was between me and one other person. Apparently, uh, they agreed if I could get it closed within, I think it was 24 or 25 days or something rather than 30, then it would be mine. I'm like, yeah, easy. So
Done.
we agreed. I won the bidding war, and that was that. So fast forward, I lived there for, what was it, 2012 to 2018, so 6 years. And I lived with my older brother and a mutual friend of ours. And I was dating my now wife at the time, and we were talking about moving in together. So we started looking at new homes around 2000, end of 2017, early 2018. And same deal at the time. The prices went up, luckily for me, because I had a lot of appreciation in the home I was in. And when we started looking, it was the same scenario. Looked for 3 or 4 months. There was just nothing out there. There were still bidding wars, not a lot of supply. And we, right at, I think it was month 5 that we were looking, we found this house that was literally at the peak of our budget. Like I set a budget for myself of 800 grand at the time. And there was a house listed. I think it was at, I want to say 810 it was listed for. It might have been 800 or 810. And it was the perfect house. You've been to my house now.
Hmm.
Everything about it. I walked into the kitchen. It had a 48-inch wolf range, which is music to my ears. The backyard. It had a pool and a spa and all of the amenities that I wanted. So we started negotiating with them at the time. The owners were building another home, I guess, and so they had to kind of get out in a quick way, and so they were willing to negotiate. And so we went back and forth. I wound up getting it for 790, so a little less than asking. And then I rode this most recent wave up, 70, 80, 90% to what I originally purchased it for. So I going back to the first one, I almost regret selling it in 2020 is when I did, because that was like
Right.
right at the beginning of the run up. And I was like, oh, okay, now's the time to sell, because I rented it out to my older brother and my buddy for 2 years. And the guy that was living in my master bedroom paying me the most rent, he was going to move out. So I'm like, nah, I don't want to get other tenants. I don't want
Right.
to hassle with that. So I put it up for sale, wound up selling it for 650, which is a great return. I, in a sense, doubled the investment at that rate. But now I get fucking Zillow. I get alerts from Zillow all the time. Like, you want to get your home report for your old home, and now it's like 890 is what they estimate its value at, which
Right.
is always a thorn in the side, but it is what it is. And I thought I got a pretty good deal at the time. So
I think
that's my
regardless
journey.
you did well. Well, hopefully hopefully some of the funds from Highland went into to Bitcoin or Ethereum right in that timeline as
I
well.
would say close to 80 to 90% of them at this
So
point.
it could have worked out
Yeah.
just fine then. It probably worked
Yeah.
out fine. Well,
Yeah.
something that was interesting to me is so I was doing some reading back through some old business journals because if you're not familiar with the Phoenix market, anyone that's listening, the Phoenix market has just been absolutely unreal. I mean, there's property values that might have increased by 100% in the last 3 years. It's absolutely insane.
Yeah.
And we hear all this talk about institutional investors, this institutional investors that, kind of even just referencing the BlackRock joke from earlier. Um, there was still a large amount of institutional investors back, 8, 9 years ago. And I actually found some articles from 2013 that were highlighting this idea of not necessarily BlackRock, but some of these larger institutions coming in and buying houses. So it's interesting now that it's become so mainstream, I guess, if you will, from that knowledge, being aware. The average person knows, hey, there's specific markets that these institutions are going after, but behind the curtains, I didn't necessarily realize that there was so much activity going on with them. And I've been fairly active within the Arizona real estate market for quite a few years. So that was quite that was interesting to me.
Totally. I think I saw an estimate that um, I'm pulling up an article now. It said it's estimated as of 2019 that there were around 300,000 single family home rentals that were operated by professional investors or hedge funds or institutional money,
Hmm.
and that in and of itself is a wild number. But now I believe BlackRock owns about 60 billion in real estate assets, and they increased quite a bit over the last year or two. So I think they're the biggest buyer of single family homes in the US over the last 2 years, just in total. But it's crazy. I think part of it is just the fact that real estate's going nuts. So everyone wants to utilize it as a hedge for inflation, which will be a topic for later. But B, just catching the wave of increase and adding it to be a part of your portfolio seems to be a no brainer. But the last part that I don't think I hear a lot of people talking about, but the whole short-term rental space with Airbnb, VRBO, etc. It seems like that's growing exponentially right now, and there's a lot of investors, BlackRock and otherwise, that are just buying up these homes to turn into short-term rentals. And I know they're going up against a lot of regulations. I heard Scottsdale is putting in a new regulation about single family homes for I don't know specifics about it, but it's going to be interesting to see how it plays out over the next couple of years, how governments view it and how investors, take that road. Uh, what are your thoughts on the single family rentals and how they
Yeah,
play a role?
I think I absolutely agree with that. Something else, just from the development world too, that we're seeing, and when I say development, not tech, on the actual the building side of things,
Mm-hmm.
is apartments are obviously, there's a huge market for apartments, especially from the renting side as well as from the ownership side. But there's been quite a bit of a shift, at least here locally, and I actually know it's been pretty consistent throughout the country as well too, of a concept called BTR, so build to rent. So what's
Mm-hmm.
happening is a lot of these builders, instead of building single family homes for sale, what they're doing is they're building larger communities, and they're selling them as a portfolio essentially. So instead of buying an apartment building with 200 units, you buy 200 single family homes, and each of those single family homes then are for rent. So that's gained quite a bit of popularity within the last handful of years, and there's a lot of money that's also going into that. Phoenix is a very hot market for that. Up towards Surprise, down towards Maricopa, there's been a lot of land entitled for that as of recent. So I think that people are wanting to live in a house over an apartment. So obviously that increases the demand for that. But what that also does is, obviously if those houses are going for rent only, it's going to drive the rent up, and it's also going to make it more difficult for your average person to get into a single family home. So it's kind of it's a double-edged sword on that. And unfortunately, I think we're going to get to a situation where there's a lot of people that are going to get priced out of the market. I mean, if we
It's
wouldn't have
already
bought this
happening.
place, yeah, I mean, you fast forward 2, 3 years from now, your entry price point on a home in Scottsdale is going to be over $1 million.
Well,
So
I
the
don't know.
feasibility of that is,
I don't know how most people afford to live in this city or, frankly, other cities, but it's been similar in I mean, we've seen it somewhat play out in cities like San Francisco, New York, LA. Those markets have just blown up from a rent and a price point perspective over the last 10, 15, 20 years that I don't understand how people live in those cities. They just allocate, I guess, the majority of their income to housing, which
Mhm.
is not what we're used to. But it seems like that's where Phoenix in general is going towards. I The writing on the wall to me is that this is going to become an LA like market in the next 3 to 5 years, if it's not already here.
Absolutely. You look at Paradise Valley, there's houses, the entry price point in PV is going to be closer to 3 million bucks. And for anyone that's not familiar with Paradise Valley, it's a city located in between Phoenix and Scottsdale. Beautiful houses, traditionally larger size lots. Um, but you have houses in PV selling for 5, 10, 15, 20, $25 million. And you're better off at to some extent buying a house in Newport Coast or off of King Street in Newport Beach for all the Newport Beach listeners out there, than buying a house in PV. It is just quickly becoming a sense of a billionaire's row. I saw a listing advertised through Instagram through a friend, and they had advertised a handful of acres for sale for $9.5 million. I think it was four and a half
Eight,
acres.
8.5.
Was it eight and a half?
Our boy Elliot. We're waiting
No,
to.
Elliot has one, and then Lexi sells
Oh, okay.
AZ. Yeah, and Launch Real Estate. They also have another listing for I think it's 4.5 acres for 9.5 million bucks.
Gotcha. I saw Elliot post something similar.
Yeah,
It's around that acreage in PV for 8.5 million.
yeah,
And like, it's Jesus Christ for the land. That
right.
is wild.
It's
But I'm
insane.
sure if you develop on it, you'll sell a $22 million home. So
Absolutely. When I
there's
think
still
that
margins.
absolutely and I think that rolls into something I wanted to talk about because I do think that real estate investing is something that a lot of people are either involved in or something that people are interested in.
Yeah.
If you ask a handful of individuals our age, would you want to invest in real estate? I'd have to imagine most of them would say yes. And there's so many different ways, shapes, and forms to get involved in real estate investing. With the increased prices, some of the things that I wanted to bring up, and this is not any sort of financial advice by any way, shape, or form. No legal advice here, but I
Don't cut
think that
yourself short. You're the expert. Everyone should
I
take these verbatim, run with them, and then call Chris if it if it goes south.
right. So my theory and my thesis on a handful of things, and I'll ramble here for a second. If we look at interest rates and there was a pullback, I think we went from about 4.19 down to like 3.9 over the last week or so. I don't keep a daily tab on it. I check in every few weeks to see where things are at. But as interest rates continue to go up, and especially if the Fed pushes here in March, they had mentioned maybe even going up a half a percentage point. Your individual from California, from New York, from Chicago, that's looking at a $2 million home there, that can get the exact same home, if not more home, for $800 to $1 million here in Phoenix or Scottsdale. I think we're going to continue to see the demand come into Phoenix. I also think that we're going to get to a point where the individuals who have purchased houses between now and the next year and a half, some of them are going to be right at that upper price limit, right on the budget. And if we now shift to the idea of essentials and durables, so with inflation going up, things getting more expensive, the cost of everything is going up. It's just the way it's going in this direction right now. So what's interesting to me and what I'm curious about is when we're going to reach a tipping point where people are just not going to be able to afford essentials. They're going to stop buying durables or extras in life because maybe, do I need that new iPhone, or is it more important to have enough money to buy food? So as soon as we get to a point where people are no longer able to afford essentials, is that then going to cause an increase in defaults? And my theory and my thesis is that sub a million, because I guess I should say sub 1.5 million. I have to imagine that if you're getting into a $2 million home, and this could be making an incorrect assumption, that you're probably going to be a little bit more financially sound. And if somebody loses their job, there might be some sort of backup plan there, or at least funds saved for an emergency fund, whatever that situation might be. But what I'm getting at is I believe that there's going to be an increase in foreclosures. And with that, kind of going back to different ways of investing into real estate, I think that there's going to be some opportunities, whether it's buying a foreclosure house that's going into foreclosure. Well, there's also a process called subject to. And the way subject to works is, I'm not an expert on this, just clarifying that, but it's essentially an assumption of a mortgage without triggering the due on sale clause. So you're basically taking over somebody's mortgage payments, taking over the property. You help that person by not having to get foreclosed on. I don't even want to throw bankruptcy out there. The opportunity for wholesalers to come in as well too. So I think there's going to be some creative ways for people to invest into real estate here in the next, call it 12 to 18 months.
Well, let's put a pin in that for a second, so I understand, because I don't think I quite grasped it. So if I'm a homeowner, I lose my job, I don't have money to pay for my mortgage, and I'm looking at a future of getting foreclosed on. And
Yes.
you're Chris, knight in shining armor, that comes to my rescue and says, "Hey, you should consider this." What does that mean? What's the clause? Why is it there? And how would that benefit me?
Yes. So if you are foreclosed on, I don't know what the time period is, but your credit is going to be absolutely demolished for
Demolished.
X
Yeah.
amount of years. Exactly. So there's that factor. That's essentially the biggest factor if you really don't want to be foreclosed on. And let's use easy numbers. You bought a house for $750,000, and the house is maybe you paid up $20,000, $30,000 because you really wanted this house. If you put it on the market right now, there's a good chance that you'd be able to sell it and you'd essentially break even. But if we get to a point where the market slows, and let's say that your house is now worth $700,000, so you have that $50,000 delta there, and if you sell it, you're going to have to pay back the bank whatever your note is, and we're using the hypothetical of you're not going to have that $50,000 to do that, or you've pulled out money, you've refinanced, and you're too leveraged. A subject to, and again, not an expert in this, but there's a lot of documentation out there for anybody that wants to reference it, is it's not an assumption because technically they can't call it an assumption, but it's essentially taking over the mortgage and owning that property with the original mortgage that's on it. And what's interesting about that as well too is we're talking about interest rates. So let's say that person was locked in at a 3.75% interest rate. And if we fast forward a year from now, maybe rates are 4, 4.5%, 5%. So there's an incentive for the investor to take over the payments on that because they're in at a lower rate, cheaper monthly payment, depending on where the value of the house is, obviously is a factor. There's an incentive for the owner to sell, not have to pay realtor fees, because if you sell for $700,000 and let's use 5% fees and whatever the closing costs are on that individual's responsibility, they're not going to walk away with any money. And if they don't have additional funds to pay back whatever that spread is, that additional funds that are owed to the bank, then they're going to be in a bad situation. You don't want to be foreclosed on. You don't have enough money to pay the bank back if you sell. So it's basically handing your property over and somebody taking over the payments on it. So there's a lot of documentation out there on it.
Does that involve real estate agents or attorneys, or how does
Doesn't have
that
to.
get done?
If you do that, if you are looking to be involved on either side, I would absolutely consult an attorney on it. It is not something that I have done personally. I know a big group of people that do this very frequently, and they're sharing the same thoughts that I have as we start to see ecosystems, just times where people are not going to be able to make those payments. That is where an avenue like this really ends up working to. It works to the sellers, the previous owner's advantage because they get out, but it really works to the investor's advantage because if you are assuming a lower rate, that's ultimately going to help you. And if your goal is to either rent it out or to fix it up and flip it, if you're holding on to that property with the lower rate, it's going to make your process a lot easier and cheaper.
So, is the $1 billion idea here to essentially commoditize subject to, and uh, assuming this trend is going to play out like you described, build a, a bank of funds to deploy on all these people that might become underwater, and just create a a company to advertise to these people, push it out on social media, and basically
There could
say,
be.
"Hey, come to us. This is subject to. This is why it exists. Don't hurt your credit. We'll take care of you." Is that what you're seeing as an opportunity?
Possibly. There's a big community of residential investors that are involved with wholesaling, that are involved with subject to, um, and it's a very tight knit group of individuals, especially here in the Phoenix market. But it's just one of many different avenues of investing into real estate. I wanted to bring it up because of where I saw interest rates going and the cost of things going up, and with this anticipation of if there are more foreclosures, what is something that we could see be very popular. Um, you
And
know, there
is it a local thing or is it a
no,
federal?
it's not local.
Okay,
I don't want to speak for other states out of Arizona because I have not seen it done outside of Arizona. I'm sure it has been done. Um, so I can't give you the best answer on that.
got it. All right. So what I predict to start playing out is just focusing on Phoenix for a moment. I think that there's going to be a slowdown of the crazy 20 plus percent increases year over year in home values. I don't think it's going to drop in value like some people are predicting. Some people are thinking that the values are just going to drop once interest rates go up, once there's a lot more supply out there because there's a lot of building going on as a result of the increase of, prices. So I think there's going to be a leveling out phase. It's going to slow and simmer, but I think it's going to still gradually go up 5 to 7% year over year, maybe more over the next 10 years, because a lot of things are pointing towards Arizona, and a lot of uh, people are still moving here. I think 2020, 2021, we were near the top, if not the top, of destinations for people to relocate to. And on top of that, we have companies like the Taiwanese semiconductor
Right.
company that is going to build a, I don't know, 50,000 square foot facility,
Oh
hire
no, it's millions of square feet. It's a $32 billion
million.
project. Yeah.
So what I meant was millions of square footage and hire 50,000 people.
There we go. Okay.
That's where my numbers aligned. But that's going to bring a ton of jobs. I heard Samsung might be building a facility out here. Apple might be building another facility. There's just a lot of companies that are looking towards the outskirts of Phoenix to develop on. And naturally, you're going to need housing. You're going to need, resources, restaurants, things of that nature. So it's going to continue to grow and expand. And at the heart of it, where we are in Scottsdale, Phoenix, Arcadia, Paradise Valley, that's going to be the most desirable place to live. And so I can't see values going down anytime soon. If anything, they'll just continue to go up, just maybe at a slower pace. Is that
Right.
what you would assume based on what you're saying?
Yeah, absolutely. I think that, and I believe it's funny because depending on what news outlet or where you're getting your information, sometimes Phoenix shows number one, sometimes it doesn't. But
Yeah.
we're top three or four, if not number one, for growth for the whole valley here. And for those of you that aren't familiar with the valley, it's a handful of cities that are surrounding Phoenix, the greater Phoenix metropolitan area, and we're consistently growing, and it really simply goes back to supply and demand. So there's only so many houses, so many apartments that you can build,
Mm-hmm.
and we're outpacing that. So I think it's inevitable that the pricing is just going to continue to go up. And I mean, just look at we're in a more we're in a we're in a similar situation to what you were describing in as you're purchasing your first home with a bidding war, but it just
Yeah.
has rocket fuel poured on it. I think I've heard houses getting 15, 20, 25 offers on them within a day or two of being listed.
Yeah. I mean, for the record, both times I purchased homes, I thought we were at definitely at the top of the market, and I was expecting the value to go down in the near future, if not, permanently. So, I mean, I was obviously naive at the time and a bit amateurish in my experience. So, looking back, it seems obvious that it was just going to continue to go up. But now is the first time, based on everything that's going on with the pandemic and relocation and everything, that it's very evident to me that this was going to happen. And maybe not to the extent that it did, but I can only see it continuing.
Absolutely. One thing I did want to touch on, going back to more, I guess, of the educational side of investing into real estate,
Mm-hmm.
is some people call it a buy box. I like to refer to it as a thesis. When you look at your VCs out there, your private equity companies, even your average day investor, you have this thesis of what you want to invest into, whether that's early stage companies or that's a specific stock type. If you want dividend stocks versus growth stocks, investing in real estate's the exact same way. So having a thesis of what your product type is, and how you're going to do that transaction, it's so important. And a lot of those factors are going to be driven on what the competition is within that space, as well as how much capital you have, how much cash you have sitting on the sidelines to invest. But make sure that you have your buy box or your thesis narrowed down. And that doesn't mean that your thesis doesn't have to change over time. You could be the person that buys a single family house and you live in it for a year, 2 years, 3 years. You save up enough money, and by buying a primary residence, you're able to put less money down initially on the first property, put a tenant in there once you move into your second property, and can kind of build up from there. So there's that theory. There's the ability to syndicate. For all of you that haven't watched the FSO Capital episode, make sure to go ahead and check that out. Those guys do a great job at syndicating. So essentially pulling money together with groups of people to buy property, and whether that's, again, single family homes, industrial buildings, apartments. FSO specifically focuses on apartments. If you want to really go for it and swing for the fences, start a fund. If you've got some buddies out there that have a bunch of cash laying around, you can go ahead and start a fund. You obviously need to make sure that money's deployed. But it's amazing how many different avenues and ways there are to truly invest into real estate.
Yeah, I was never made aware of it. I knew that real estate was a class of asset that lots of people get rich off of. I wasn't really clear how, but the more I've learned, the more I've made friends with people like our buddies over at FSO and just our community of friends. It is crazy, just the amount of opportunity that's available and the amount of cash on the sidelines that wants to be deployed into real estate. So there's no shortage of capital, especially right now. And if you have an edge in any way, shape, or form, go try to raise money or go try to work for somebody who has raised money and get some expertise under your belt. But once you do, swing for the fences, because it's a great way to build wealth. And the tax incentives we haven't even gotten into. I don't know if you want to touch on any of that, but
Sure.
the tax code is essentially written directly for real estate investors. It's wild.
Businesses and real estate investors.
Yeah.
Yeah, I guess the three things that would be interesting to touch on. One would be exchanges, so 1031 exchange. depreciation, and then maybe we get into the stepped up basis, which has been kind of a controversial topic. And I know that they were talking about potentially getting rid of it. But if you bought a house in 2022, you bought your first house and you lived in that house for 10 years. So we now fast forward to 2023, and you move out, you buy another primary residence, you live there for a handful of years, and you decide, hey, that first house that we lived in for 10 years, it's maybe close to paid off, or it's increased significantly in value. You can go through a process called a 1031 exchange. You sell that property, you can identify a new property depending on a specific timeline. You can take the funds from your first sale, put it into your second property, and you can essentially rinse and repeat. So if you put $100,000 into house one and you sold it, maybe it was a $500,000 house, you bought it for 100 grand, or you put 100 grand down. If you sold it for $1 million, you can take all of your funds from property one, put it into a new property. You now own a $900,000 house for that 100 grand that you originally put down, and you don't have to pay taxes on it as long as you exchange into it. You can rinse and repeat for that. You can continue to build up off of those, and that's called the 1031 exchange. Again, this is not tax or legal advice. Seek counsel. Stepped up basis and depreciation. Those are some interesting ones too. If you have an investment property, let's say you're a high net worth individual, and let's just say you've got an income of $250,000 for your total household income, and you've got a $1 million investment property that you own. You can depreciate that over a period of time, so it'll help offset your income. So the tax incentive is there, and then ultimately, when you die, depending on how you have an estate set up, and again, seek counsel for setting your estate up. The individuals that essentially receive that property upon death receive it at a stepped up basis if it's appraised or if it's sold within a specific time frame. So if you originally bought something for $100,000 and you fast forward 60 years from now, you can leave a family a portfolio of X amount of millions of dollars, and they don't have any taxes to pay on that. So with the estate tax changing, and the government looking into the stepped up basis as well too, who knows how long those will be around. But like you said, the tax code is absolutely written for real estate investors and business owners.
Yeah. So go buy some real estate.
The takeaway from the episode is we need to buy some real estate.
So we should at least touch on a couple of current events that are going on and how they relate to inflation that we're experiencing, goods and services that may or may not increase exponentially in pricing over the next near term. So we're recording this on March 2nd.
March 2nd.
Yep. And we're in the midst of a war in Russia. Well, technically in Ukraine. Russia has invaded Ukraine. And as a result, pretty much every Western country has sanctioned Russia and its leaders. And those sanctions are mostly financial and have very far-reaching effects that, from a geopolitical perspective, hope to cripple Russia's economy, thus not allowing them to continue an expensive war or continue an expansion for reasons that Putin may or may not want to share at some point. But the whole point is to reduce their ability to conduct war, conduct business, etc. What I don't think a lot of people understand or talk about is how that might affect the average person in any country longer term, because Russia does export quite a few things, not just oil. And as a result of, stopping that spigot, there's an absolute that there's going to be effects felt by us, felt by European countries, individuals in those areas, etc. So what do you predict in terms of food prices, gas prices, things we might not normally expect. How do you think these sanctions are going to play out in the next, let's just say, 6 months to 2 years?
Yeah, I think it's inevitable that the pricing of everything is probably going to go up. Gas is a pretty obvious there. With a lot of the political pressure with the current cabinet to shift towards a more renewable energy source, there's obviously been um, uh, fossil fuel accessibility that's been reduced. So, in retrospect, was that a good idea? We can't really say that now. But I think gas is absolutely going to go up. I was reading something about the processes within farming, and I believe it was manure. It could have been something else. I don't know if it was Bloomberg or something. What resource or what outlet I was reading it from had highlighted the cost of, and I want to say it was manure. Manure had gone up exponentially, and farmers were essentially calculating what it would cost to produce an acre of corn, if you will. Let's just use that for this example. And then it potentially could 4x in cost. So we're going to feel it in a variety of different ways. Anything, our supply chain in our global economy is so intertwined. I don't think people realize how intertwined it is. So I think it's inevitable that really the cost of pretty much anything, I wouldn't be surprised to see increases. Another thing that was kind of interesting as well too is with the sanctions. I have a good friend of mine who is currently helping a business sell, and they have a engineering team in Ukraine, and they also have an engineering team in Russia, and they are not able to pay them. And before the sanctions went into place, what they did is they paid them up front for a handful of months, and they're eventually going to have to turn over all the IP and transition to an engineering team elsewhere. So above and beyond just the cost of goods and foods, it's the sanctions are going to affect in a variety of different ways.
Yeah, it's crazy. I This relates to what we were talking about earlier in the sense that costs are just going to inevitably continue to rise. It's going to price people out of not only real estate markets, but cost of living in general. I almost see it as an inevitability for some of these westernized countries, including the US, to introduce a form of UBI, universal basic income, to supplement the effects of not only inflation, which we were already experiencing, what the government told us as 7.5% roughly, but what's actually closer to 10 or to 12 likely
20.
percent. Yeah, depends who you ask.
Right.
But I don't. The Fed can only do so much to
Does that come
affect
with a
that and
worry
fight it.
of increasing inflation though? If you're,
Yeah, yeah. I mean, the
it's really a double-edged
the
sword. It's
yeah, the
unfortunately.
worry is always just having inflation be a runaway train and it just hyperinflates into oblivion, like what's happened in Venezuela and other countries that have experienced those types of issues. So, luckily, we have some tools to help offset it. Um, but the political climate we're in and where I think public sentiment is right now, I almost see that as an inevitability for people that will get foreclosed on, that will wind up being on food stamps, etc. There's, you know, I think it's just the natural course of things. And then how does that play out from an employment perspective? Are those, people going to still seek gainful employment? Are we going to shift towards more of an automated world, which we're already going towards anyways? What does that look like for the, business landscape as a whole? I don't know. I just feel like these few things in the next few years are accelerating, and I almost see the writing on the wall. I would place a big bet that some form of UBI is going to be introduced, and we're just going to see inflation stay at high levels for the foreseeable future.
One thing that was totally devil's advocate to this, and I haven't read what Kathy's been saying for the last few weeks, For a week and a half or so. But I believe it was about 2 weeks ago. She had mentioned the supply chain, and when everything does get caught up, she's very confident about seeing deflation.
This is
So
Kathy Wood, I assume.
yeah, with ARC,
Yeah,
yep.
the
So
famous Kathy Wood.
the famous Kathy Wood. So if we, I guess the question would be, with the war that's going on between Russia and Ukraine, how much stress does that put on the supply chain above and beyond natural gas and oil and their other key exports? How much does that really tie up the supply chain? Are we going to see the supply chain come back fully, and we're going to have an abundance of goods and products? And is that going to cause the price of everything to go down? And to throw another curveball in there, if Russia and China continue to get closer with one another, and it looks like that's the direction that things are probably going to go, is that going to then start another constraint on the supply chain?
Yeah, and then the third wrench that some people are talking about, but a lot of people are forgetting about, is when is China going to invade Taiwan, and
Is
what
it
will
is
that
it
do?
even an if at this point, or is it just a when?
That's what I was saying. When will they invade? And
Right.
Taiwan manufactures what, 80+% of semiconductor chips
Mm-hmm.
in the world. So how's that going to affect production of technology related goods and the supply chain as a whole? Obviously, we're in a situation right now where cars and the auto markets and aftermarkets have blown up just as much as real estate because there's such a shortage of chips to put in cars. What's going to happen if China holds all the chips for themselves? So, I mean, hopefully that doesn't happen, but that's just going to be the icing on the cake of just a complete disaster, and no one's going to know what to do. But um, in terms of what Kathy was saying, I always find it difficult to listen to people like Kathy, or even like somebody like Bill Ackman. These billion-dollar funds that behind closed doors make huge bets in markets that they publicly are attempting to sway. So, Bill Ackman famously over the last 2 years came out on all of the news channels when the pandemic was starting to rage on, and basically throw fear into the public domain. And he basically made what, 3 billion. It was 3 billion or 30 billion. I think it was 3
I know what you're
billion
talking about.
in
Yeah,
a
I don't
matter
remember
of
the exact number.
like a month, as a result of his bets he made that the market was going to go down short term and then rebound, etc. So I always have difficulty
He
listening
has a
to.
history with that too. I mean,
Yeah,
look at Herbalife and
yeah.
a few other stocks that they've kind of gone after as well.
Yeah, Kathy less so, but everyone has an incentive. Everyone's trying to get an edge and affect that edge as best as they can. And I mean, Elon Musk does this better than anybody in terms of how he portrays himself to the public and how he makes business moves behind closed doors. I, in fact, I don't know if you saw this, but did you see his brothers being investigated by the SEC for offloading Tesla stock?
I read that it was both of them.
Yes, but more so Kimball. I don't know how you pronounce it, but his brother apparently, I think 24 hours prior to Elon tweeting that poll asking his followers should he sell $5 billion of stock to donate or whatever it was, his
Mhm.
brother sold like 500 million of Tesla stock, and yeah, I'm interested to see how that's going to play out. But it's this type of stuff that I can't trust any of these people with what they say because there's always incentives.
So does that bring us into Dogecoin? I feel like that's a perfect relay into crypto.
Yeah. Yeah. Dogecoin. I don't even know what that's at these days. Uh, let's look up Dogecoin price. It's sitting at 13 cents for
Okay.
one Dogecoin to the US dollar, 13 cents. So it's simmering at some lows over the last year or two. Um, yeah, crypto's
We have
another
seen a
animal.
nice we've seen a nice uptick in Bitcoin. I mean, what what's really interesting and in my opinion great to see is the global community rallying behind cryptocurrency as a way to help people out for instant transactions. I mean, we'll look at Ukraine for example. You were telling me the numbers a little bit earlier. What
Mhm.
were you saying was the value of the dollar amount that had been sent?
Yeah, so I saw an infographic. Uh, I think it was yesterday talking about donations from both, I believe it was the UN versus people investing crypto into accounts that Ukraine holds. And from what I recall, and I'll try to pull it up to see if I can get exact numbers, the infographic basically showed crypto donations equated to $58 million over the last, week. And the UN donations so far are sitting at 20 million. So just completely dwarfed. The UN, the United Nations, can only scratch 20 million out of their pocketbooks versus crypto just comes up with $58 million to provide. That to me is that one infographic should be created as an NFT as the turning point for public adoption, because this war just shows that cryptocurrency can't be sanctioned. It can't be shut off, taken out of the SWIFT system. So certainly Russia's going to adopt it to a degree or just create their own network, which they may have already done because I know they've been working on a lot of these things since 2014 when their plan really started for Ukraine.
Mm-hmm.
Um, so we might see some things like this play out. But um, yeah, to me, this is the use case is having a financial system that can't be touched by any individual or government be able to transact whenever as long as you have an internet connection. So
I
go
think it's a
crypto.
great catalyst for it. Yeah, absolutely. I think that not only the benefit that it's doing and it's serving for individuals right now, but also I think the exposure as well. People that might have been skeptical on it prior, I think this could be a really good use case to prove that hey, it's not only legitimate, it works significantly more effective than really any other fiat currency or institution, I guess, if you will.
Yeah. Yeah. I'm obviously bullish. I think it's the way of the world. And in fact, we just interviewed someone prior to this, and we were talking about the fact that there's a lot of evangelism around Web3 and that being the future of everything. And I see it a little different. I think Web 2 is just going to layer on top of Web 3. Web 3 is going to be the background layer and rails for any financial transaction that occurs on the internet, which essentially is everything at this point. Nobody really transacts in paper dollars anymore unless you're in the middle of the country. But on the edges, nobody's transacting in paper dollars. So everything's done online. It's just a matter of continuing to make that more efficient, take out middlemen, lower the cost of transactions, make settlement times quicker. And that's really what the use case is for crypto. So I think we've just seen an acceleration of adoption, and that's just going to continue. So we'll see.
I absolutely agree.
Anything else for today's docket? We're getting close to an hour.
I think we're wrapping up our time. Well, if you haven't already, if you're still watching, thank you. And make sure to hit that like button. Make sure to hit the subscribe button, and give us your comments and feedback below. We'd love
Yeah,
to hear what you guys are liking.
comment on what you think Bitcoin's price is going to be by March 30th.
March 30th. What do you think? Do you
I
want to
think
do you want to
I
throw
think
a prediction out
Bitcoin
there?
yeah, I think Bitcoin's going to sit around $61,000 on March 30th.
You think we're gonna get to 61,000 in 28 days?
I do.
Okay. All right. I'm gonna go with, we're at 43 right now, right? Plus or
Mhm.
minus.
Yeah.
All right. I am going to go with 49.5.
All right. It's been marked. Tell us your thoughts and we'll pick something special for the winner if they get it right on the dot.
Perfect. Mind the Growth Podcast. Thank you guys.
Thanks for checking us out. Love you guys. Bye.